Welcome to HYCM Insight with myself, Giles Coughlin. The market move for the session ahead is as follows. Last week, Jerome Powell signalled a 50 basis point rate hike at May's FOMC meeting, as well as at least one other 50 basis points rate hike to come this year. Now, the Fed have clearly signalled that they want to tackle high inflation as a top priority. And so a series of interest rate hikes are on the way from the Federal Reserve. Now, much of this has already been priced in and anticipated by investors. But as we approach the FOMC meeting, we may see a final bout of US dollar buying in anticipation of a 50 basis point rate hike. Now, what is interesting to note is that Seasonax shows that the last few days of April and the start of May tends to see US dollar strength. Look at this data from the US dollar index. Between April 29th and the 17th of May, the US dollar index has risen a total of 11 times over the last 15 years. The average rise in price has been 21.85% for the annualized return, and the average rise has been plus 0.99%. Now, the largest fall was 2.48% in 2009, largest gain over 5% in 2010. So will the US dollar now see one last push higher as we approach May's FOMC meeting on May the 4th? Or is the US dollar already at peak bullishness, and will the US dollar start falling from here? Do remember that HYCM clients can access the Seasonax product in order to analyze over 25,000 different currency pairs, indices, commodities, as well as individual stocks. So please do contact your account manager for a free trial to get started right away. The main risk to this outlook is that the US dollar is already at peak bullishness, and we will see very limited gains into the FOMC meeting.